Good afternoon, this is Brad Dennis with BIS Commodities with your weekly update. Coming to you a little bit late. This is for the last week of September and August 4th. Tepid volume in the corn market and bean market today as we saw some short covering. Grain markets are still all about the weather, and over the weekend we had some flip-flopping of ideas of where this rain function for the middle of the week is going to hit, who's it going to hit harder and such. So the flip-flopping of those weather charts has caused a little bit of short covering today, but as I said, that's with tepid volume. Also, you've got to realize that last week we had a low in December corn at 61.5. Overnight we had a low of 61s. So I would imagine that you have some people taking advantage of this little bounce up in the market. You're still looking at 378 as a very good resistance area. That's a gap area in December corn. Whereas beans, they took out yesterday or today or overnight, they took out that 1054 level or 55 level, made new lows. We did bounce up and close strong at 1080. Kind of looks like with that strong close of 1080 closing over Friday's high, we might have a little bit more run in this bean market. We'll see if the turnaround Tuesday mentality takes over. Beans right now are in a volatile stage. They're setting pods and losing pods and such, so I would expect a volatile trade. Overall range in this thing for the next couple weeks is probably that 1055 area to about 1110. Any close above or below those areas, then you'll probably see some follow through. The surprise in the market on Friday was the shorts in the market from the managed funds or the managed money, about 64,000 in corn and about 18,000 in beans. So we'll see what the weather scenario happens. Last couple weeks we've seen a lot of premium added on at the beginning of the week, and then as the week drug on, that premium was taken out. So we'll see if that holds up this week or not as well. In the cattle market, we were mixed a little bit today. Today is first notice on August cattle, and we saw August rally better than the Decembers. Last week, a little bit of disappointment on the cash trade, coming back a little bit, and that was the initial sell-off from last week. This morning, though, we come in, like I said, first notice day, so a lot of those longs got out on Friday. We're seeing this cattle market bounce up. Now, the one thing that I'd point out on the cattle market is last week that August-October spread was at even money, not giving anybody incentive to move cattle. Already today, we're looking at a $2 inverted market, meaning August is $2 more expensive than October. So with that being said, it gives a little bit more incentive to move product right now instead of holding on to it. As far as economic data is concerned, last week we were looking at non-farm payrolls, GDP, and such for the equity markets or the outsides. We also had the FOMC meeting, and what did we learn about it? We learned, first of all, that in the equity market, good news means bad prices. When we had GDP come out at 4%, when we had non-farm payrolls still over 200,000, we had sellers in the stock market. And that's basically a function of, hey, we feel like the Fed's going to keep with the tapering. Same scenario out of the FOMC meeting. It seemed to us that they're going to continue with their tapering. They're going to be done buying bonds in, it looks like, October now. So are they gearing up for some interest rate hikes in the 15 time frame? Probably, but only time will tell. So taking some premium out of that market, still have not made the significant downward trend in it. Today we're looking at an inside market there, inside day market, so really can't say that we have that correction yet in the stock market. So that is the update for the last week of September and the first day of August. End of message.